Hello traders, this is a TradeSight trade recap. Wanted to talk here a little bit about the action in the market on Wednesday, February 13th, 2013. Now this is options expiration week, and even though options now expire, we have contracts for every week, it's still the third Friday of every month that's considered the primary expiration for each month. So that's this Friday, the 15th of February. And whenever you have an options expiration week, usually the day or two, typically 2 days before the expiration, you get an options unraveling move. And what that means is that the big players take their options positions and sort of unwind them, take them out of the market, and move the money over the next few days into the next contract, moves to the next level of protection, if you will, to avoid the expiration. They don't all want to do it on the day of expiration. Typically, most of this is handled in advance. When that happens, because a lot of the big money is in options, a lot of times we get what we call an options unraveling move on the Wednesday of options expiration week. If it doesn't come on Wednesday, occasionally it will come on a Thursday. So as traders at TradeSight, we're always alert to this possibility, and we want to see if that move occurs, because it can have an impact on our picks in the stock market and our futures calls as well. So we wanted to look a little bit at how this played out on this Wednesday, and also how it affected not only the market, but so you can identify it, but also some of our stock picks in general helped us sort of refocus ourselves in the right direction. So here's a look at the S&P E-mini futures. This is 5-minute bars. We're 3 bars into the day on that Wednesday, the day of options unraveling. You can see we've gotten a gap up here in the market, and we're trading basically flat so far. And what I want to show you, we're going to go bar by bar here initially, and talk a little bit about what's going on in the market. So initially we did make one dip about 20 minutes in, trying to break the lows, maybe head back and fill the gap. That ended up being sort of a head fake market. Then before even 30 minutes in, we had resumed back towards the highs of the session. So here we are at highs. And the thing about the options unraveling move is that the way you measure it is you look at the market exactly 1 hour into the market. From that point forward, you're going to see if volume holds up more than it usually does. Volume usually dips off after about 60 to 90 minutes, but if it holds up more than it usually does, and then if you get a direction from wherever you are at that point, it has almost nothing to do with what the market's done up to that point. So here we are, just 30 minutes in, market's near highs. Oops, apologize for that. Market's near highs for the session. And the next thing that happens is as we drift higher over the next, there we go, sorry about that. We drift higher over the next 20 or so minutes. Okay, so now we're 45 minutes into the market near the highs. Okay, here's 50. 55. Right here is 60. So this is the point where we're 1 hour into the market. This is the point where we're going to measure from. And again, it really has nothing to do with the fact that so far the market's gapped up, it's pushed higher, it's a strong market. That will have an impact on some trades that we took at the time, and we'll review that after we talk about this. But from this point forward, again, the market could just keep pushing up. It could start heading down. But what you know is if it does that and market volume holds up, then you're probably going to continue in that direction all the way into the close. That's typically the tell. So let's see where it starts to play out. Initially here, maybe a little bit of downside bias, pick it up a little bit, and there we go. Okay. So what we're saying here is the options unraveling move is occurring. It started right about here at the after 1 hour play, the blue line, and it seems to be a downward move. If you look down at the bottom of your screen, you notice that volume is still good. Matter of fact, one of those bars better than a lot of the bars that had preceded it. So volume is still there. That means they are unraveling these options positions, and it is mostly a downside bias, meaning the way that they're closing the positions is putting pressure on the market. This is going to usually take you all the way through the rest of the trading session. So let's first take a look at what that looks like, and then we'll go look at some individual stock picks. And you can see here, look at this volume bar, big plunge after this, fall all the way back to almost filling the gap, and look at the volume on that. So again, market is moving, and that is the unraveling occurring. Now we're heading over lunch, kind of get a little bounce. But here's the thing, even though you slow down over lunch, even though you pause, what you should expect is, because you are getting that options unraveling move, that the continuation, once that's done, will be back to the downside. So let's take a look at what happens once we come back from lunch. I'm on Mountain Standard Time. So we come back here at about noon, which is right here on the chart. And if they come back and start to trade again, oh, look at that, almost immediately resume the downtrend and make new lows. Okay, isn't that interesting? So that's your options unraveling occurring. And, you know, it takes you basically to the back end of the day. We don't sell off all the way into the close. Matter of fact, there's a very late day rally, and that's it. Okay, then there's the next day starting. So it is a push lower. That's your options unraveling move occurring. Now, how did that impact some of the stocks that we had? Let's pull a couple of them. Now, one of the stocks we had been tracking is Checkpoint. This is a nice software stock, trades a lot of volume, millions of shares a day, and it's got a real nice cup formation here. We're looking for a breakout on this. We've actually been following it for about a week or so. We wait patiently for the price breakout to occur. We don't buy them early. We want to see what the market conditions are at the time. So 51.91 is a new high breakout of this 6-month cup formation on Checkpoint. Real constructive pattern. You want to buy it when the market's heading up intraday if it breaks out. And you want to monitor the market from there, sell a piece of your trade after 20, 30 cents, and then try to hold the rest if it works. How did it actually play out? Well, let's switch now to the intraday chart. And remember, the secret to trading is it doesn't matter how much you like a pattern. Some of them just won't work. But the other thing is, even if you like a pattern, even if you know it's got the type of setup that could really be explosive to the upside, you still have to make decisions about things that go on in the market. And so here we are with Checkpoint. You can see 51.91 was going to be the trigger. So again, here's 15 minutes into the market, 5-minute bars. The stock's heading up towards that price point. Little pause right here. If you remember the futures, this was the time 30 minutes in where the futures were hitting new highs, and the stock triggers through our 51.91 trades about a good chunk of volume right in that window, about 400,000 shares over 15 minutes. Good volume as it triggers here. Now again, we like to see it to get to 20 or so cents to sell a piece and just kind of build a cushion, and then we don't have as much to worry about on the trade. And that happens pretty quickly in this first push. But the question now is, I don't mind giving it some room, especially to sort of retest this area right here, this 51.80, this blue line that you see. You can play around there all at once. Even a sweep under that's not going to concern me because the pattern is so good in the long haul as long as market direction stays up. So here we go. You can see we sort of played with that level. We held that level. Okay, held above it, held above it. But here's the thing. Here we are right now, and we're at the 1 hour mark. And what do we know happened? We know that right after this, we started to see signs of a downturn in the market from options unraveling occurring. So at that point, now we're getting a little more concerned because what do we know? If we're seeing that options unraveling move, if the volume's holding up in the market, and if it's to the downside, most of the rest of the day is likely to be the downside. And so now, even though this great chart pattern has triggered, unfortunately, we're going to have to really tighten it up, cut the trade here if it doesn't work after this point. So we get out of this trade here on any move down, which you see right here. Keeps us out of the trade. What would usually be a trade we would love to be involved in. And if the market direction had held up, probably would have run a couple points over the next few days. But if I just jump through the rest of the day here, you can see how sharply this thing sold off. So again, knowing that options unraveling move was out there, seeing it happen, helped us manage this trade and keep it to really just a flat trade for us, maybe even a small gain depending on where you closed it out, instead of letting it turn into this loser. And the reason it became this loser was because of the options unraveling move. Now let's see what happens instead when we flipped ourselves to look for a couple of short triggers during the session. So this is the intraday chart of FFIV, and Rich focused on this one, looking for a break under the lows, which occurred, as the market was starting to fall apart from that options unraveling move more than an hour in. He was focused on this breakdown here under the prior day's lows. This has been a weak stock. And take a look at what ends up happening. So there's our short trigger going into the trade on the short side. And look what ends up happening. Okay, real nice winner for us over the course of the session. I mean, that's more than a point right there, right? Almost $1.50. Real nice winner. Okay, and again, changing our minds because we saw the market direction shift in the market gives us that winner. In addition, we had one more call. Let me pull it up. This is the FAS. It's an ETF that trades with the market. So Rich was also interested in this breakdown here on the FAS, under the new lows right here. And so we took a short there as well. Another one that ended up playing out nicely for us here in the afternoon as the market sold off. So again, seeing that options unraveling, knowing that once you get it, the rest of the day is going to have that downside bias, helping you get out of the trade that was a long side trade that you really liked, but you knew was going to be facing an uphill battle, and keeping that to a minimal issue for yourself, and then turning immediately and focusing on some short setups like this. It really gives you a nice, profitable, clean day on the day of the week that we expected to have the better range of the week because of the storm we had on Monday, the options expiration, which will be boring on Friday. We're leading into a 3-day weekend. It's really that Wednesday where the unraveling occurs, that if you're on your toes and you're paying attention, there's a lot of information to help you make good decisions, have a real profitable trading session.